Okay, there we go. We've got the screen up. Yep, sorry for that delay. So let's get going. Thank you very much for attending, everyone. This is our non-farm payrolls live coverage webinar. So we've got 5 minutes for a bit of pre-chat. We'll see what happens with the numbers, see the market reaction, and then we'll look forward maybe to what it means for the dollar and stocks. So what we're going to look at today, actually maybe I'll just close down myself. What are we going to be covering today? Just the market expectations, what are the numbers we're looking for, how has the data looked recently and this year, what happened last month in some of the key pairs. So I'm focusing on dollar yen, euro dollar and gold, just because they tend to be the ones that react most to non-farm payrolls. I mean, I get it if you trade the indices, you want to look at that reaction. They just don't trade as much off the NFP in my experience. Obviously happy to look at those charts though. Look at a live reaction to the markets. I'll probably try and bring the data up on the screen too as it's released, and we'll go through those conclusions. So I'll look out for you guys saying, get off the slideshow, the numbers are about to come out because I've got less time than I thought. So this is from our website, consensus 200,000. I think Bloomberg have it 195,000. I think this is off Dow Jones or Reuters, one of the two, the 200,000. The other big number obviously will be the average hourly earnings. So that's disappointed last time at 0%. But we're expecting a bit of a return to normal levels now at 0.3%, which will uptick the yearly numbers to about 2.7%, and the range basically for the last year has been about 2.5 to 2.9%, so we're right bang in the middle of the wage range. So not any signs of runaway inflation via wages yet, but just basically holding up. This I pulled off Forex Factory. Good little indication of where the data's been. You can see the disturbance in the last few months just because of the hurricanes in the US. We had that -33 figure, obviously a bit of a complete anomaly there, and then we bounced back massively way above trend last month. So now basically what economists are expecting is we're down at 200,000, which, as you can see, at the start of the year we were kind of hovering below 200,000. The latter half of the year we've been tail end 2016 we were a bit below. This year we've kind of been a bit more variation, but I would say more above the 200k mark than not. Obviously there's always a bit of a throw dart on a dartboard, kind of actually guessing what the numbers are, but I would say maybe 200,000 is undershooting it a bit, because basically this is when all the hiring takes place pre-Christmas, pre-holiday season is in November. So I don't know, I think people are distracted a little bit by the averages and by the hurricane and forgetting about the holiday hiring. So if that's the case, we might say a little bump above 200,000. Not sure how that will reflect on wages. This is the wage data. You can see that it's, while as last year we were actually above that 3% mark a bit more often, you can see basically it kind of hovers in around this flat line 0. It was a pretty bad number last month, but the month before it's 0.5. It's generally around 0.3 on average. So I think if it's 0.2, if it's 0.4, you can't really read much into it on a 1 month basis. So, we only got 1 minute to go actually. Maybe I can review this stuff afterwards actually. Let's pull up the charts on the screen now just so that we're ready. So yeah, this was, right, so here's Euro. Let me get it to the right one. NFP webinar screen. Right, let me pull the news window over. Right, does everyone see that? So hopefully the news will flush through on there. So this, oh no, let's see, have we still got US Tech on there? Have we got my levels still? Oh no, levels are gone. Okay. Oh, we're getting the numbers, I think. That's it. 244,000. Where's my data gone? Over here. There we go. So that's the That's the data right there, 244,000. So it was a bit of a beat. We're seeing euro dollar spike up. So it looks like, what's the negative reaction in the dollar for? Unemployment right 4.1%. Work week, average hourly earnings, pretty poor again. So I think that reaction in the dollar is probably the average hourly earnings still down at kind of 0% when we're expecting that 0.3%. That looks like the reason for the negative reaction, because actually we've had a bit of a beat on the number. Last month was revised to plus 38k as well, so no longer a negative number last month. So actually on jobs, quite positive. Now, what's going on with the charts? So frustrating that my levels have gone from here. I had to restart the computer. You can see basically we're hitting these lows here. We're in a downtrend. That's what makes this market a little bit more unique to last time, and I'll compare those charts from last time. But now we're in a bit more of a trending environment for the dollar, and so previously we were in a bit of a range. So we've got some kind of levels, but we've had a bit of a mixed report. This caused the dollar to sell off initially. If we look at dollar yen, we're going to see the opposite, presumably. We've fallen down to these support levels. There's a little support level there on the 15-minute mark. Let's see if I can pull out here. It basically fits in with this high over here in the past, and this peak here. If we get another leg lower, that would be down to here. It's the 113.10. We've basically fallen down to 113.25. But you can see the headline number was better, and we're in an uptrend. So this is a potential buy the dip scenario in the dollar. Because actually the headline number's fine. Wages, did anyone really expect them to be that good? Overall the trend is fine. A bit lackluster, obviously. It doesn't bode that well for inflation, but overall, are the Fed going to not hike because of this? Don't think so, no. The labour market still looks pretty solid. Gold, again, gold in a bit of a downtrend. Okay, my levels were here for gold. Basically, we ran into those old highs, and we're selling. Look at that, big reversal. So I think that's what we're going to see. Gold's looking particularly soft. But I think the dollar is going to pick up on this initial negative reaction. But look at that level, that old low there. So basically we're in a downtrend, right? So this is the leg lower. We've bounced up to the characteristic of a downtrend. The old support is now the resistance. And pretty. If you took in terms of again, I'll look through the last month's charts too, but basically 30 pips or so has been a fairly typical movement. So if we judge where we started here, down at 117.40-ish, we've only made about 20 pips to the top side, but obviously in a bit of mixed data. If we'd made it up to 117.60, that would have been more kind of characteristic, I suppose. 17.40 to 17.70, 80, yeah, that would have been more like 40 pips up there. If it had been a more outright dollar week number, we could have got up to there, but we didn't. It's a bit more mixed, and looks like we're selling off from these levels. Basically, it's a downtrend in these charts at the moment. If we pull out on a euro dollar, we seem to be kind of rolling over from what looked like an uptrend taking place. We've basically fallen over, obviously started making lower lows, lower high, made lower lows in the last few days. We're coming down to challenge these lows down here. I think we actually could, based on these levels here, let's see what, go to a 4-hour chart. This was last month's NFP actually, funnily enough, it's saved that on there. I think we could drop down through to these lows. The first test will be down at 117.13, and then 116.90-ish is that high from down here. Fits in basically with the neckline of the double top, if you can see a little bit better here on the daily chart. So this level in here, looks like we've kind of made it through this potential kind of support here, and we're heading down to the next layer down there, it looks like, for the moment. Let's have a look to see if we've got any particular reactions to the NASDAQ. Let's see if we've got any movement. Not too much movement in stocks, it looks like. A little bit of a push to the top side. All news is being construed as good in equity markets, and there's obviously other global news which overwhelmingly the aversion of a government shutdown in the US, Brexit breakthrough news, Basel III looks all right for banks, so quite a lot of good news for stock markets today. I think they're trumping this kind of bit of mixed data. Is there any questions at all? Anyone want me to look at a particular chart or anything of that nature? Please send it through. This was last month's report. So you see how we were in a bit of a kind of, we had a trend coming into it, and then we were quite rangy heading in on a 15-minute chart. And then you see what happened. We basically had our level there, sold off into the level and rebounded and actually trended quite nicely afterwards. So you can see that, you know, buying it right on the news release is a bit tricky, but if you do have some levels pointed out and you have a bit of an idea of the trend, sometimes these news releases just provide a quick entry point to where you wanted to get in. This was the euro-dollar reaction last time. Again, a bit similar to this time, where it spiked one way. You know, if you're just buying on the initial reaction, you're getting sucked in last month, and it looks like the same might be happening this time. It doesn't seem like it's massively reversing at the moment in the charts, but that's, if you've got a level you want to sell at and you're in a range, obviously maybe you had the first level in mind. You can see it was kind of respecting that by the body of the candles. But you know, if you did have a sell in here, obviously a bit too aggressive, but if you did have a sell up here at this high too, then that was the one that worked, and you rolled over and you pretty much came down to the support and then chopped around after the news. So if you do have your levels in place, you can see how they do play out. This was gold last time, so maybe if you use that internal level, you'd have been all right. If you use this kind of topper level, it never quite got there, so if you had the order right on that level, yeah, it didn't play out that time, but obviously it sold right down to the lows. Similar kind of looking chart to the euro, obviously, dollar yen being kind of the opposite. Let's flip back to the current charts. What's euro doing? Is it continuing lower? Yeah, okay, so we're right, we've made new lows for the day now. So that's what I was saying, you know, the trend is down, mixed data, you know, we might have to chop around a bit before we take out the lows and start heading lower, but this is quite a big reversal we're looking at. Okay. Oh, look at that, yeah, quite a vicious looking candle, quite a nice little entry point. What is that line based on? Did I just draw that in to match the low? So this peak over, is it? Losing track of my lines here. Oh, okay, yes, these lows in here, you can see that's the support there, and it's come down to that first level. If you'd waited for this spike low down here, or this peak, you know, we didn't quite get there. But that's, you know, probably the pros and cons of layering your entries. You know, you either wait for the best entry down here, you can miss it, or layer a few ones with, you know, with half your lot size, for example, on each. In this case, the first one got triggered. So we've already had some quite solid moves in the dollar based on all the news, but you know, at the end of the day, the trend is up, so maybe still a little bit further room to the top side in the dollar. For me, overall at the moment, the pound may be being the exception to the rule here, but I think we're in for a little period of dollar strength, just because the other central banks have been so dovish in their outlooks, and the Fed does look like it's sounding fairly confident. We'll have to see how that plays out next week, when obviously we've got the Bank of England and the ECB and the Fed obviously all next week. For me, net effect of this result, Fed still hikes, probably still sounds pretty confident about the labour market, but obviously there's always going to be that caveat about inflation looks a bit soft, and this wage data probably is going to help that in that statement, so that may have a slight dovish tilt to the statement. I still expect a fairly hawkish Fed next week, which will be dollar supportive going into next year. Right, let's call it a day at that. Sorry for the delayed start. Thank you for tuning in, everyone, and good luck for trading for the rest of the day, and see you hopefully at the weekly market analysis webinar on Monday. Cheers, Jasper signing out.